Today we're going to be discussing and explaining the revenue agent report. A revenue agent report produced by IRS is usually done at the end of an IRS audit, an income tax audit. What will happen is you'll start with the initial letter that IRS provides to you about the questions and issues that they're exploring. You'll go through the audit, and at the very end of the audit, after all the data has been collected and the findings have been made, IRS will produce a revenue agent report. And the revenue agent report is broken out into three sections. The first section at the top on page 1 are the adjustments to income. Now the adjustments are going to be typically starting with income, whether income has increased or decreased, which it could go both ways. Typically the IRS will increase the income if they find additional income that was not reported on your tax return. Then you'll have the expenses. And the expenses on your return basically are a negative, right? They offset income. So if IRS is disagreeing as to an item of an expense, it'll be a positive number to offset the negative number. So if you're deducting $100,000 of rent and the IRS only was able to substantiate $20,000 of rent expense, there'll be an $80,000 variance. And so it'll show rent expense, $80,000 as a positive number because that positive number offsets the negative, which is the expense. Then down below that will be the corrected tax liability. And then below that are any credits such as prepayments that you've made, withholdings of income, tax, things like that. And then the balance on page 1 down below. This is the 4549 report. It's a 2-page report. On page 2, the top will have all the penalties. So if you filed a late return, if you made payments late, typically IRS will also include a negligence penalty. Negligence is because if you kept poor records and you didn't have any substantiation or you didn't have enough substantiation where IRS could tell you made some typical errors, they'll assess a negligence penalty. IRS can also assess a fraud penalty if they can establish willfulness. And there's fraud for failure to fraudulently file a return on time, and also typically fraud in overestimating or overstating expenses or understating income where they believed it was more willful rather than negligent. And then after that, after the tax balance on page 1, bottom of page 1, and then top of page 2 are all the penalties, on top of that IRS will assess interest from the date the return payment was due. And that would have typically been April 15th of a current year if you're an individual, and if you're a corporation, it would have been in March. So at the end of this process, you're going to get the revenue agent report. And typically a revenue agent report, they give you 30 days, or actually sometimes 10 days to dispute it. And then it's basically called a 30-day report. You have 30 days typically to provide a protest letter. And if you don't, then IRS will conclude the audit with a notice of deficiency. And at that point, you're required to file a tax court petition going to the United States Tax Court. So typically what we recommend, if you believe that the revenue agent overlooks some facts and you have some substantiation, it's not really being considered by the revenue agent, you definitely want to communicate with the supervisor and try to get the supervisor involved. Don't worry about if you feel that the revenue agent will be offended. That's their job. The supervisor's job is to look over and also approve the revenue agent report, but contacting them will help you negotiate, and especially if something's being overlooked and not considered or missed, absolutely I'd recommend contacting the supervisor. So you'll have to file a protest letter again within the time that they give you, the deadline. Typically it's 30 days. It could be shorter, especially if there have been multiple revenue agent reports. And then if you do file a timely protest letter, you can go to IRS appeals, which is basically like mediation, except the IRS revenue agent's not present and it's you and the appeals officer trying to resolve the issues. If you're unable to resolve it through IRS appeals, then you will get a notice of deficiency if you disagree, and then you'll have to file a petition to go to U.S. Tax Court. So there's 2 ways to get the tax court, either going by filing a protest letter and going to appeals, and then if it's not resolved and you disagree, you can go to tax court that way, and you have to file a petition with the tax court within 90 days of receiving the notice of deficiency. If you miss that time period, there are no extensions. It's a statutory deadline. You're basically unable to legally contest it. If you, back into the audit, if you don't file a protest letter, you'll get a notice of deficiency, then you'll have to then file the petition with the U.S. Tax Court within 90 days of receiving the notice of deficiency from the revenue agent during the audit. So 2 ways to go to tax court. Hopefully that was informative. If you have further questions, feel free to reach out. I'm John Milikowski, founder of Milikowski Tax Law.